Good afternoon, everybody. Thank you for joining Champion Solutions Group. Today we're going to be talking about the state of New York, the Department of Financial Services, and what they did in September of 2016, which they proposed a broad set of regulations for banks, insurers, and other financial institutions that are designated to promote protection of customer information as well as IT assets and other regulated entities. And today, Champion Solutions Group, along with IBM, are going to discuss this New York State Department service that is proposed and is going to be rolling out in January. And we're going to talk about the cost of this cybersecurity blanket. And with me today, my name is Chris Pyle. I am the President and CEO of Champion Solutions Group. I'm going to be the moderator for today's meeting. We are really blessed to have Benazir Douala from IBM. She's a senior financial cybersecurity specialist, really focusing in on the cybersecurity for many of the large banking and financial institutions. With more than 19 years of experience in the technology field, she is one of the leading IBM senior cybersecurity architects throughout IBM. She continues to lead client discussions on almost all topics regarding cybersecurity maturity, risk-based transformation, and other points of view when it comes to the financial industry. So Benazir, welcome and thank you for joining.
Thank you.
Okay, and we also have with us Debbie Brenner. Debbie Brenner is Champion Solutions Group's Chief Information Officer. Debbie has been with Champion for more than 8 years. She holds an Information Security and Privacy Officer position here at Champion. Prior to working here at Champion, she was the Chief Information Officer at AmComp Incorporated, which was a financial services insurance company where she held the lead technical executive position for their initial public offering, and also the merger of AmComp by the acquisition of Employers, Inc. So Debbie, welcome. Thanks for joining.
Thank you. Glad to be here.
So great. Well, listen, we really appreciate everybody attending today, and it's really interesting. We know about what's going to be happening up with the state of New York and what they're going to be rolling out in January. And what we really wanted to do today was do a little bit of a deep dive on what this whole thing is about. We have some great slides, we've got some great information, and I think we're going to have a really good informative session today. And what we're going to do is we're going to lead off with Benazir, if you don't mind kicking this off with some of the slides that we're very interested in. I know from a lot of our clients to hear what IBM's perspective is on this new regulation and how it might not only affect those in New York State, but also as it rolls out throughout the country. We know that it's very prescriptive in its nature, and looking forward to hearing from you. So Benazir, why don't we go ahead and bring up the slides here for you and let you go ahead and start explaining what it is, Benazir.
For sure. So before that, Chris, I want to thank you all for taking the time to participate today, and thank you, Champions Group, for organizing this amazing webinar. I think we all would agree that the topic of discussion could not have come at a better time. Being in a financial services market, being one of the most highly regulated industries, it's so far important for all of us to be aware of the new regulations as they evolve, as they emerge, and the cost of non-conformance, right? So it's very important for us to understand what's in the horizon and how it's going to impact all of us. So thank you for getting that organized. Appreciate it.
Yeah, no problem.
I'm assuming. So I believe that most of the participants today may have had a chance to look at the New York State Department of Financial Services cybersecurity proposal. In case or in the benefit of those who haven't had a chance to look at the proposal, let me just give you a quick peek at what it is and what it entails. So in early September 2016, that Chris alluded to, New York State Department of Financial Services proposed a new cybersecurity regulation that was aimed to protect New York State from ever-growing threat of cyber attacks. It requires all the entities or regulated entities. Now, what I mean by regulated entities are the entities that operate in New York under banking law, insurance law, or financial services law to comply. And what the regulation requires is these regulated entities is to establish and maintain a robust cybersecurity program that is designed to protect customer information or consumer information, as you may call it, and ensure the safety and soundness of New York State's financial services industry in general. So this is not something that has come out of the blue. The New York State Department of Financial Services has been working with about 200 financial institutions, right from banking institutions to insurance companies. They have surveyed cybersecurity experts in regards to the emerging trends, the risk. They have done some kind of high-level due diligence in terms of what are the policies and procedures financial entities are following. And based on the results of the survey and based on the gaps they have identified, they have used this proposal to mitigate some of them. So it's a pretty elaborate, pretty exhaustive proposal that takes into account certain gap areas that were identified in this survey. If you can Google New York State Department of Financial Services survey for for banking as well as insurance companies, you will see a couple of hits. You might just take a peek at it and understand, because it gives you a good perspective of where organizations are in regards to their cybersecurity program or cybersecurity awareness.
Yes, excellent, excellent. I know that they are keeping that up to date, Benazir, as you're saying, as far as how companies are complying. It's pretty interesting. They're doing a really good job of doing a lot of surveys of the New York financial institutions and keeping those up to date. And as you said, if you Google that, you'll find a lot of information on that.
Perfect, yeah. And it's not that all the financial entities that operate in New York have to comply. There are certain limited exemptions that have been identified in the proposal. For example, if you have a financial entity that has fewer than 1,000 customers in each of the last 3 calendar years, and if you have fewer than 5 million gross revenue in each of the last 3 fiscal years, and less than 10 million in year-end assets as calculated by GAAP, then you might have some level of exemption when it comes to this regulation. But please be aware that if during any period of time you do not qualify for the exemption, then you will have a transitional period of 180 days to comply. That brings us to the next point, that the regulation will go into effect on January 1st, 2017, and the regulated entities would have about 180 days. So the transitional period is 180 days. For them to comply. So it's definitely, it's coming. We have 6 months for entities to understand what their gaps are and start mitigating those gaps in order to comply. And the requirement is for annual certifications that would start around 15th January 2018. So you'll have to certify against this proposal annually, and it starts as of January 18, 2018. So that's the overall perspective of this proposal. It's first of its kind. We haven't seen a state-level agency or a state legislature come out with such an exhaustive proposal. And it does have some golden nuggets. If you read the proposal, it does provide and go beyond certain best practices or certain regulations that we are currently aware of when it comes to cybersecurity. So what does this entail? What does this proposal tell us? What's the road to compliance look like? So going on to the next slide, please. So if you were to look at this proposal, it is not inconsistent with other regulatory standards or guidelines that we have seen. For example, you might be regulated under FFIEC or might be following NIST cybersecurity framework or guidelines. So it's pretty much it's consistent with the other regulations and other cybersecurity best practices, but it addresses another level of detail, another level of technical requirements that you may not have seen as much in the other regulations. What you will see on the screen right now is what I've taken the proposal, I've split the proposal into 4 key categories. And if you look at the 4 key foundational domains in any organization, you split it into people, process, technology, and governance, right? So what you see is the 4 key categories I'm going to talk about, specifically around areas that stand out within the proposal. Let's look at the program and policy management, which is actually a part of the governance aspect of any organization. What it mandates is that every participating or regulated entity needs to have a robust and risk-based cybersecurity program that addresses the cybersecurity events of today across the multiple risk domains. And those risk domains are the domains that we are aware of: people, technology, application, infrastructure, right? So across the risk domains, they talk about having a cybersecurity program that creates that provides you with approaches to prevent, detect, respond, and remediate cybersecurity events. The other element of the same governance is around the requirement of having a written cybersecurity policies and procedures. A lot of organizations have written cybersecurity policies and procedures, but this proposal goes a step further, and they demand that you not only create written cybersecurity policies and procedures, but also keep it up to date. Keep it up to date through annual approval and reviews from board of directors or equivalent. So what it has done is the survey results that New York State Department of Financial Services has conducted. What they have found out is a lot of financial institutions have a robust cybersecurity program, follow cybersecurity best practices and guidelines. A lot of them have policies that are written and documented, but they're not following the best practices in keeping those policies up to date. As a result, the policies that were written 2 years ago continue to go forward without having a thorough review whether this policy is applicable in the world of today, right? So that's the kind of gaps they observed, and they have tried to mitigate those gaps in this proposal. The other area that I think stands out in this proposal is around the third-party information security policies and risk assessments. So they clearly call out the need for organizations to have a return policy in terms of dealing with third-party risks and third-party handling of customer information or information technology assets. So that's a new feature, and they make it very elaborate in terms of what they expect the third-party risk assessments to entail.
So, Benazir, so in other words, that if a financial institution is outsourcing some piece of their business, are they responsible for making sure that they are being compliant, or who would get, I guess, audited? Would it be both the financial institution as well as the third party, or do you know about that and how that would work?
So this is a great question, Chris. So typically what we do is we rely on the third party to make third party liable for the information, for our information, for our customer information and our information regards to information technology assets. So that brings to an interesting point. So what they did is when they looked at the survey, they found that a lot of organizations conduct thorough risk assessments when it comes to their own infrastructure, but they lack the same rigor when it comes to assessing third-party risk. Now, when you are using third-party to handle your non-public information or sensitive information, you're not actually going to outsource your accountability with third-party. You still need to retain the accountability of the information. So if the third-party gets breached tomorrow, it's not that they are responsible, but you are responsible as well. So I think it brings the onus on the financial entity to ensure that they do conduct due diligence, they do understand the risk associated with third party and the business they are conducting with. So I think that's the core and crux of having the third party risk assessment as a critical component of this proposal.
Yeah, very interesting. Okay, thanks, Benazir.
No worries. And the last one we talk about is around having notification policies and procedures in place. So what I mean by notification policies is, in case you lose non-public information, or in case you lose information because of a cybersecurity event, that might refrain you from operating as usual, doing business as usual. You need to report that event, that incident, to the superintendent within 72 hours of you identifying that incident. So this is something that, of course, we all might be aware. Some of the regulatory bodies do impose and mandate the disclosure of a cybersecurity event or an incident. And this proposal just takes it a step further and say that if you are breached, in the case of breach, you need to notify to the superintendent within 72 hours. And one of the key important aspects of this proposal, and I would suggest the participants look at it, is in terms of the definition of non-public information. They have provided a pretty exhaustive definition of non-public information, which may not align with what we consider as non-public information today. So that's something that you may want to look at. And if you already have appropriate policy and procedures in place to protect your data, ensure that the non-public information definition is accounted for.
So, just a question there, I guess, or really maybe Debbie or Benazir, either one. I mean, a cybersecurity event, I mean, does the superintendent or does this actually explain what a cybersecurity event really entails? Because, you know, it could mean different things to different people, and have they really honed that down so there is no gray area on what a cybersecurity event really is? I'm not sure if Benazir, if you...
Sorry, go ahead. So Debbie, if you want to go ahead, please feel free.
It does put things around it as to explaining what it is. What it doesn't do is tell you how you need to go about doing the notifications, as well as far as the incident response and what you have internally in order to be able to address the notification process. So it's very important as a part of this that those financial institutions are putting together an incident response team, and all of those people on that team understand what their role is and who should be communicating and who needs to be notified.
Excellent. Okay, thank you.
So it's pretty exhaustive, and as I said, a clear definition of what you mean by a data breach is well specified in the proposal. Of course, we would have our own conflicts and challenges in terms of definition, but it clearly lays out the requirement and the importance of an incident response plan. And I think that's a critical component most of the financial institutions are looking at today.
Excellent.
In terms of automation, right? So that's a critical component of the proposal as well. So coming to the people aspects, right? So it really calls out the need for a security officer, a chief information security officer, a dedicated security leader that can manage the cybersecurity program, that can enforce the cybersecurity policies, and that can report to the board of directors biannually on the effectiveness of the security program, as well as in regards to the risk posture of the organization as a whole. So it brings the important point around having a dedicated security leader accountable for driving cybersecurity within a financial entity or a regulated financial entity. It also talks about the cybersecurity personnel and intelligence as one of the critical components. So it talks about things like appropriate levels of cybersecurity personnel. Now, that appropriate level could be fairly subjective. If you're a smaller organization, that appropriate level could mean 2 people. In case of a bigger industry account or a bigger company or organization, financial entity, it would mean 200 people. So you need to still maintain and retain enough security personnel in-house to be able to deal with and detect, prevent, and respond to the cybersecurity incidents of today. And they also put a lot of emphasis. Go ahead.
I have a question on, for some of the mid-market or regional financial institutions that we work with, not all of them, necessarily have a dedicated CISO. Is New York State saying that you have to have a dedicated CISO, or can they have multiple job hats or multiple job roles, and one of them is being a CISO, or do they have to be full-time?
No, I think they talk about having a dedicated CISO, a person who is accountable, a sole accountability for driving maintaining, and creating an effective cybersecurity program. I think it raises the importance of having dedicated security leaders.
Yeah, I was going to add, Benazir, it's not just adding this title to somebody's current job role. They have to have the experience and be qualified and know what they're doing in order to be able to be successful.
So they just can't take their secretary and say, now you're our CISO. So it has to be a qualified individual.
Qualified individual. Correct.
Okay.
Correct.
So, Benazir, you were going to talk about the training for a minute.
Yeah, so of course, when it comes to cybersecurity personnel, we know that it's very difficult. We are in an era of advanced cybersecurity threats, cyber threats, sorry. It's difficult to find the right skills. It's difficult to find the right people for the job, and security is not a very trivial domain. So they do talk about reliance, that you might rely on third party to help assist, fill the skills gap. And again, that comes with you need to do their own risk assessment to ensure that you have a partner to help with your cybersecurity program. And then final comment they made is about training, that you don't just need to recruit people to drive and help you with your cybersecurity program, but you need to continuously train them. Okay, so you need to keep their skills up to date to the emerging and evolving threats of today. And they also talk about having a cybersecurity awareness training for the rest of the organization. Because people can be the strongest defense, and they can be the weakest link. So you want to ensure that the cybersecurity awareness is embedded in the culture of the organization, not just limited to the security organization. So those are some important points they make in the proposal as well.
Yeah, it seems like it's very, very prescriptive on what New York's doing, and suggesting out to the masses in the financial industry here. It's very prescriptive. We have a few questions in some polls, so we're going to go ahead and launch the first question that we'd like to have, if you don't mind answering. And the first question is, do you have a dedicated designated CISO in your organization today, somebody who is designated and qualified, as Debbie said, in this role? So we'll wait another minute for this. We're up to about almost 50% of you have voted already on this. Okay, so we'll go ahead, and if we look at this here, we basically have, it's still a few more coming in, so let's just wait another second or two. Okay, so 61% of the people in attendance today said they do have a designated CISO, and the 39% said no, they do not. So, okay, so that's great to know where we stand with the audience today. The next question that we had, we'd really appreciate your, your participation, is do you have a written cybersecurity policies and procedures? Are they written? Do you have those? Do you know where they are? If you would. So we have some people coming in right now answering. Thank you so much. Let's just give it a few more seconds here. And this looks pretty good, Benazir. We are approaching 90% with yes. But wait, some latecomers have come on, and now it's dropped down to 86% yes, and 14% of the people attending say no, they do not. And then I think this one here, Benazir, is one, and I know, Debbie, this is one. If the answer is yes, 86% of you said yes, we do, then the next question is, how often do you keep them up to date? And the answers here for how often do you keep them up to date: biannually, annually, once every 2 years, more than 2 years, or you've never really kept them up to date. And Benazir, as they're answering these questions, this goes back to the program and policy management that you spoke of. While you might have written policies and procedure, what they're really mandating is that you keep them up to date.
Correct, correct. And I think that's the gap we are seeing across the board. Everybody says we have a written policy. I know it's somewhere else, somewhere on my portal, When I asked the next question, okay, how often do you update them? I was like, I think we did it 2 years ago, last time I saw my data security policy. So that's the kind of, I think that's the kind of gap areas that this proposal is trying to mitigate.
Well, I tell you what, this audience is pretty good. Of the people that participated and said, the 86% that said yes, they do have policies, 73% of them updated annually, 5% said biannually, the other 5% said once every 2 years, and then 18% said that they have never updated their cybersecurity policies. So thank you very much, audience, for your candor and participation in those questions. But I think that is, quite telling, Benazir and Debbie, on why these mandates are coming down and how everybody needs to be vigilant, if you would, in regards to their programs and policy management regarding keeping up to date with their cybersecurities. So Benazir, we have 2 more columns here. We're talking, we addressed the policies and programs and the people. So what about the procedures? What is mandated as far as some of the procedures in this new regulation?
The procedures are fairly consistent with what you would see in any other regulations or regulatory best practices around cybersecurity. They talk about you need to do penetration testing and you need to do penetration testing annually, so they call out the frequency. They talk about vulnerability assessments. You need to do quarterly vulnerability assessments, which actually makes sense because the threats keep changing every day, so you need to ensure that you are understanding what are the potential exploits in your infrastructure before they get exploited. So they recommend you do it quarterly. They talk about periodic review of access privileges. So basically not only just providing controls, but you have to periodically audit and review the access privileges. They talk about secure engineering practices. They talk about things like secure coding. You need to do application security testing, especially when it comes to your critical information assets. They talk about annual risk assessments. So they make it a mandate that you need to do risk assessments, but you have to do it annually, and that includes third-party risk assessments. They mandate the requirement of an incident response plan. I believe 99% of financial entities would have an incident response plan, but they actually call out the things that need to be encapsulated in those incident response plans. And then they also talk a little bit about data retention, although they preclude to the fact that if you are following any existing regulations or standards for data retention, then you should continue to do so. So they're not actually being prescriptive around your data retention policy. They just want to ensure that you align and that you are following that as a policy or a procedure when it comes to protecting your data. From a technical requirement,
can I have a question? I think maybe Debbie, if you could answer this, but what's the difference between a pen test on an annual basis, a penetration test, versus a quarterly vulnerability assessment? Is there a slight nuances between the two?
So from a penetration, I was going to say, Benazir, from a penetration test perspective, typically annually third-party provider partner does your penetration testing, tries to get inside from the outside, seeing where they can break in. It's required that those are done annually, and then in most situations, every 2 years, you have a different partner doing that so that you can switch it up and you're not using the same one who knows your system and can further testing. From a vulnerability perspective, that can be as simple as your own internal looking at your firewall logs, seeing what's coming across, as well as having third-party companies as well perform from an internal perspective to see what's going on.
The vulnerability from everything from patching and everything else, there might be vulnerabilities or whatever from that perspective. Benazir, do you have anything to add to that?
No, I think Debbie addressed it pretty clearly. It's an outside view inside, and the other one could be something that you could do through vulnerability scans every quarterly or every weekly, depending on your existing policies and procedures. It's very important to understand the exploits and the vulnerabilities in the infrastructure before they get exploited. So this is just a more proactive approach in taking certain actions before something bad happens.
Excellent, excellent. Okay, great. And so you were going to address the technology, the final pillar?
Yeah, and one of the things they talk about very consistently throughout the proposal is in the use of technology. So we all agree that technology enables automation, enables operational efficiency. So they talk about audit trails. You need to capture audit trails, so you need to maintain operational logs, not just security logs, but operational logs, transactional logs. And they also go to an extent of telling you how long you need to retain those audit trails, as much as 6 years. They talk about security intelligence and monitoring, and in the cybersecurity world, I think this is not new to us. Everybody has invested in some kind of a security information and event management solution, or SIM as we call it.
Okay. I mean, 6 years is quite a long time for an audit trail. That's pretty amazing from that perspective there.
Correct. Yeah. But, you know, storage is getting so cheap. Why not, right?
Okay. And then I also noticed a question for you, Benazir, on an audit trail system. 6 years worth of audit trail is mandated. Is that correct?
That's also the proposal requirement, correct.
Wow. I mean, that seems, you know, quite intensive. Can I ask you about the multi-factor authentication? Is this a requirement that they're asking for in regards to customers getting to their websites, you know, their financial information of the financial institution? Is it internal to the financial institution as well? What does the multi-factor authentication cover that is required?
So it's both. Actually, it's both. Any access to non-public information through external means, such as a web application that is internet-facing, or anything that is concerned with internal access through either your employees, your contractors, or your third-party business partners. So anything that has trying to access non-public information, you need to enable it with multi-factor authentication or risk-based authentication, or whatever you want to call it. So it's actually pretty exhaustive, both internal and external access, and it's actually specifically around non-public information.
Right. So some of the financial institutions we are working with, they thought it was just for the customer-facing, and you know, we're like, no, that's not the case.
That's not the case. No.
Yeah,
no.
Exactly.
And as I said, the definition of non-public information has expanded in this proposal. So what you would deem as sensitive information, it may not necessarily be the same in the proposal. So that's one of the things that you may want to look at more in detail.
Excellent. Okay.
And they also talk about encryption of data. Sorry, you had a question?
No,
No, go back.
Okay, sorry.
My fault.
Sorry about that.
No worries.
So the encryption of data.
So they talk about encryption data. Again, non-public information needs to be encrypted not only at rest but also in transit. Now, they also accept the fact that certain technologies would be difficult to implement. So if feasible, they have something like, if possible, then they should encrypt the data in transit as well as at rest. So that's another, and they talk about data encryption. And again, it all depends on where you're at in your maturity curve and how you're encrypting your data in transit or at rest, but they call it out in the proposal.
Got it. Well, Benazir and Debbie, got a few questions. I guess, you know, Benazir first, you know, many of the people that are in attendance on today's webinar are not from the state of New York. You know, why is it important that the rest of the country understand what New York is going through, and why should they care?
So let me just take a step back, right? So financial services sector are a lifeblood of any nation's economy, right? And if you look at U.S. economy alone, the financial services sector is the third largest sector, contributing to around 8% of the GDP. Now, 7 states, including New York, count on financial services for more than 10% of their real gross product. So it talks something about financial services and how they are the economic backbone of states like New York. And cyber attacks on financial services are becoming more frequent. They're getting more sophisticated, and they're getting more widespread. So you need to have appropriate measures in place to deal with the economic harm that could be perpetrated by cyber crimes or cyber criminals. Now, I'm not talking about cyber criminals of the hacking type who are just script kiddies or they're just using hacks to cause digital disruption. I'm actually talking about advanced cyber criminals, state-sponsored organizations, global terrorist networks, so on and so forth. Now, for the state of New York, which it's supposed to be the financial capital of the world, I think it's required for them to take a decisive action to protect themselves from the disruption of cyber threats. And that decisive action has come in form of this proposal which mandates the regulated entities to protect that information and indirectly contribute to the soundness and safety of New York State's financial services industry. So that's my gist, and it's not just the New York State is doing this. You just need to understand that I believe other states will follow. Any state that relies on financial services heavily for the economic output, they will be impacted, and the trend will just continue.
And how long do you think it will take before the other states have, this regulatory compliance like the state of New York? Do you think it's a matter of, years or longer than that before you think other states will follow what New York is doing and actually, putting it into law?
So as I mentioned earlier, Chris, this proposal is first of its kind. It subjects entities, regulated entities, to robust cybersecurity requirements that have never been adopted by a state legislator or legislature agency. Now, there are certain challenges and conflicts, particularly for entities that operate in more than one jurisdiction. So, for example, I'm an entity that operates in New York State as well as in Massachusetts. Should I be governed by a federally regulated body, or should I be governed by the state? And in most cases, there might be conflicts in the way the requirements or regulations or proposals are written, right? So there might be contentions and challenges. But coming to your question on when will the states, when will other states follow the suite? It's just a matter of time. I would think that the success of this proposal in protecting customer information would be a significant driver for other states, the remaining states that I mentioned, the 7 states particularly, to follow. And it's just a matter of time. And I think I could see it as early as mid-next year when some of these other states will start adopting what New York State has put forward.
Yeah, I think Benazir, the other states are looking and watching to see how much impact it's having on those New York financial companies, and lessons learned, getting that stuff out of the way. Let somebody else be first, and we'll follow. I think you're exactly right.
Right. So, Debbie, just to follow up, you've seen all of these and these different mandates. From your perspective, of all the mandates that are in this new legislations, which ones do you think our listeners should start with or pay attention? Where do they begin? Do they start with the technology side, the program, the people side? What from your perspective, for the people that are listening, what do you start with first?
I think the biggest component is really to understand the components and do a gap assessment so you know where you're lacking or where you are not being sufficient enough to meet the minimum requirements against the minimum requirements for the proposed requirements. And it could be something as, getting back to the basics, something as simple as implementing a security awareness and privacy training policy for your employees. All those basic things that sometimes get overlooked that don't take a lot of time or money to get going. But it's really important that in order to establish a cybersecurity program, you know what you have and what you don't to get started. So that gap assessment could also include a risk assessment and really help you put some definition and governance around all of the controls that you have internally, and then any of the controls that you're using, any third parties and their controls and what they're using. And one of the biggest things is you've got to have people accountable. You've got to be auditing to say you're doing what you're doing, and you've got to be able to prove that you are doing that, or you are not going to be able to attest and check the box saying that you are.
So you can't just say that you're doing it. You got to prove it. You got to prove it. So that's a great. But Okay, so that's great. Benazir, from IBM's perspective right now for the audience, and I know, IBM has a massive cybersecurity arm with your X-Force and all the different products and tools that you've developed into services. I don't know, maybe this is a far-out question, but what does IBM believe right now to be the biggest security threat to the financial sector? And what are you seeing from an IBM perspective, and what are you recommending or telling the financial customers that employ you that you believe is the biggest threat to the industry?
I'll definitely talk to what I think would be is the biggest threat to the industry, and this is definitely based on the trends that we have seen over the past 6 months. But keeping up, before talking about the biggest security threat, we know that financial institutions are in continuously defense mode. They need to keep up to the compliance requirements that continue to change, they continue to evolve. They are trying to build resiliency, and they're trying to build intelligent cybersecurity defense. So they are doing things to keep a step ahead of the bad guys or the cyber criminals as we spoke about. I think one of the key areas that I feel we need to put a lot of attention is that the cyber criminals are transcending from people who are just involved in causing digital disruption or stealing your data to more organized crime rings and state-sponsored cyber warfare. So basically, what I'm trying to tell you is these groups are using the tricks of cyber criminal trade to advance their personal and national agenda. So that's kind of threat we are seeing today. And what they're using and how they're using this threat is through normal, simple techniques or tactics. And that tactics is in terms of exploiting the weakest links. So we're talking about advanced cyber warfare, we are talking about cyber crime rings, but they are all basing their tactics on exploiting human vulnerabilities through social engineering, exploiting the technical proficiency of organizations. So basically, at the bottom line, exploiting the weakest link. One common example I could give you, which was the Bank of Bangladesh heist that happened in February 2016. So actually, it happened this year. And it was a very organized, very well-planned, executed cyber attack in which they used a combination of techniques. So they used a combination of techniques through an organized crime ring. They used phishing emails and used phishing attacks to get into the email server. They got hold of the SWIFT codes, and they used the SWIFT codes to move money between the accounts. So it was a very well-planned, meticulous strategy that these organized criminals have used in order to break into the SWIFT system. Now, another example I could talk to you about is just USA Today. Last week, I think Friday last week, USA Today published an amazing article on the biggest operation the law enforcement has done against cybercrime. So what that was, Avalanche, they discovered and they held Avalanche Group accountable. What Avalanche Group did is they sold and rented cloud-based software services to cyber criminals to hack into banks, to recruit people to move money, and those people were called something like money mules. Yes, so this was an organized crime. Sorry, go ahead.
No, they were called mules, right? The money mules.
Money mules, yeah, something called money mules. So, and it was a massive international cyber criminal operation that took 4 years to investigate and take down. Now, the government of U.S. actually posted links to free tools so that organizations and individuals can scan the machine to ensure that they were not targeted of that scam. I think they sent out about 1 million emails, phishing scam or phishing emails out to individuals and organizations. So that was the extent of the cyber operation we're talking about. So definitely organized cybercrime and cyber warfare is turning out to be one of the greatest threats. And specifically for financial services industry, which is the lifeblood of any national economy, it could mean a serious economic harm if not mitigated or if not prevented. So that I would see as the biggest threat. And of course, ensuring that human vulnerabilities are not exploited to an extent that they have been able to be successful today.
Yeah, well, that's really good, and I would agree. It's definitely seeming it's gone to a much more organized syndicate rather than just individual players. And so, yeah, thank you so much for your perspective on that. So, really, Debbie, I think really, after all this here, and this is our last slide, but after hearing what Benazir has to say, and from your role as the CIO of a financial institution in regards to insurance and workman's comp and all of that, what does this all mean at the end of the day?
I think one of the biggest things for everyone to realize is this is not something new. If you're using any other cybersecurity or any other regulatory standards and compliance standards that you must meet, all of the components that are in this New York proposed regulation proposal is something that should already be being done. You probably already have it in place. It's going to be just another box that you need to check. It also highlights, as stated on the slide there, that really from a culture perspective, employees and everyone needs to understand that cybersecurity is each of our problem. Not only does there need to be corporate governance as far as the executive leadership and the board of directors, they need to be paying attention and they need to be involved and they need to be requesting the information about what's being done on those relevant companies that they're responsible for with regards to cybersecurity. The proposal also does detail in depth of what is considered non-public information and what the minimum requirements are to protect that information. As Benazir stated on a previous slide that we talked about the third-party risk assessments of both yourself, your company, as well as any third-party companies that you are involved with, your outsourcers or cloud service providers is a critical component. And details, documentation, and knowing what you're going to do when you identify something that you're not meeting and what you have to do to mitigate that risk and remediate it immediately.
Excellent. Yeah, and so never a dull moment for the financial institutions, and the public thanks you for doing as much as you possibly can to protect everybody from really what Benazir was mentioning that IBM thinks is the biggest threat is this organized unit or its organized syndicates, whether it's state-funded or organized crime, who is coming after the financial institutions. So really, what we would like to offer to everybody is what IBM is calling the Security Readiness Review. And, Benazir, I'd like to thank IBM and yourself for offering this up to our listeners today and to all of the people who are in attendance. We really appreciate this opportunity. Maybe you could review what the people who want to take you, being IBM, up on this offer. What is this Security Readiness Review and what does it mean to the organizations?
Sure. So we are a part of IBM Security Architect community, and as a part of Architect community, we create a lot of reusable assets. And one of the assets that we created 2 years ago is what was called Security Controls Review. So what we did is, as architects, we talk to clients. We talk to clients about their cyber risk posture, their security maturity, what are they doing in terms of mitigating some of the risks, etc., so on and so forth. So what we decided is we came up with the Security Controls Review where we identified around 14 risk management controls. Now, this risk management controls are general controls. They're not aligned to any specific standards or frameworks. We wanted to keep it as generic as possible. And what we do is we go to the clients, we have a no-fee for our workshop where we sit with the clients and help clients self-assess where they are at in terms of maturity across the 14 risk management controls. And once you assess, once the customer self-assesses themselves, they will also identify what they want to be in the next 12 to 24 months, or maybe 24 months, or 24 to 36 months in terms of maturity. And based on the insights we gather, we produce a report, and report is for the customer to keep. And that could potentially feed into the cybersecurity program. So I have taken the same asset And because the New York State Department of Financial Services security proposal talks about 90% of those risk management controls, I have made some minor tweaks to those controls, the same asset, and I've added some relevant components as mentioned in the regulation, so that organizations, financial entities who deem to be regulated under the new proposal would have a way to self-assess where they are at, what are the gaps, and what they need to focus on in order to meet compliance requirements. So that's the kind of our asset that you see on the screen. We cover fairly exhaustive controls that you see in the proposal. And again, it's offered as a no-fee workshop to our clients. We definitely have a qualification pipeline. And based on that, we could set up a self-assessment for you.
Excellent. Well, thank you very much, Benazir, for IBM offering that up. And so regarding the next steps, we're going to be sending out an email to anybody who would be willing to request the IBM Security Readiness Review. You'll be receiving an email after this presentation. We also have a security risk survey that literally hundreds and hundreds of institutions have taken. If you go to www.securityrisksurvey.com, again, that's securityrisksurvey.com. It's a self-service or a self-assessment where you can go ahead and see how you are faring in the different compliance and regulatory pillars, if you would, and helps you do a self-assessment of your organization. Hundreds of companies have taken this survey and have found it to be a great benchmark of where you think you are today and some of the gaps that need to be covered moving forward. And then briefly, Champion Solutions Group, you can go to our website at championsg.com/finance and hear about what we do for mid-market finance organizations, wealth management, insurance companies, whatever it might be. And we do a lot of business there representing IBM as well as far as others. So we're going to go ahead and ask if we have a questions and answer box here. And if you have any questions, please go ahead and send them up there. So Benazir, the first question that comes up was from Stu Campbell and Debbie from Stu Campbell here. Quarterly vulnerability tests required for any size organization? That was what he was asking. And is it for any size organization, do you know, Benazir?
It's for regulated entities. So I mentioned the limited exemptions apply. If you qualify for the limited exemptions, then you are okay. But it's any regulated entity that falls and operates under the jurisdiction of New York State Department of Financial Services would have to do quarterly vulnerability assessments, irrespective of the size, as long as you qualify and you're regulated under NYDFS.
Okay, great. Thank you very much for that question, Stu. If there's any other questions, please go into the GoToWebinar box and question box, and please just fill out those. Okay. Well, listen, I know that this ran a little bit low. We have a question from Blake Roth. The question from Blake is, this is applicable to anyone doing business in New York, not just New York-based companies. Is that correct? Assuming you meet the other specifications. So again, let me repeat the question. Is this applicable to anyone doing business in New York, not just New York-based companies? Is that correct?
Any financial institution that falls under New York jurisdiction, yes, you would have to comply with these regulations. It's not be New York based, but if you're based in a different state but you have operations in New York, then you would have to comply with these regulations.
So if the organization does not have an office in New York, but let's say does business with a New York institution, would they have to follow suit?
Yes. If they're a financial entity, yes. If they're classified as a financial entity.
Okay, I hope that answers your question, Blake. Any other questions? Okay. Well, listen, thank you all very much for your time today. We have recorded this session. We will be putting it up on our website and sending out in the email along with the Complimentary Security Readiness Review. We'll be putting a link to the recording in case you wanted to share it with any of your peers or colleagues. Benazir, thank you on behalf of everybody for IBM participating and sharing, IBM's perspective on what's going on with this new regulation. Debbie, thank you for your time. We do appreciate it. And more than anything, we appreciate everybody out there who came and attended today's webinar. We appreciate it, and we look forward to talking with you soon.